Hey everyone, it's Shauna the Tax Goddess. Today I'm going to talk about buying and or selling a business. Okay, this can be one of the most exciting times in your life if you're buying a business and just getting into it, or you're selling a business and you're heading towards retirement or starting a new adventure. This can be an extremely exciting time of your life. We get involved. Us as tax strategists, it's very, very, very important that you have someone like us on your team on top of potentially your broker, your mergers and acquisitions person, your CPA, okay, your financial advisor. This is where we absolutely need to play a game of football. This is a team sport when we talk about buying and or selling a business. Now, there are a couple of things that I want to cover today. So the first one is, how do you protect yourself in the eyes of the IRS, whether you're a buyer or a seller, okay? The IRS actually has a special form that is required for both the buyer and the seller to complete in order to ensure that the deal is considered fair, okay? So this form is called the 8594, and this form allocates both the purchase price or the sales price, either way. It allocates that price across different classes of assets, okay? Now, why is this important? Why does the IRS care? I mean, I just sold my business for $1 million. What do they care, okay? When you sell and when you buy, depending on whether you're selling or buying, you get different types of tax treatment on the things that you're buying and selling, okay? So for example, if you sell your business for $1 million and you are able to say that $1,000 is inventory and the other $999,000 is goodwill, and really what you're selling is the name and the brand, the goodwill, then $990,000 is taxable as capital gain, which you get a fantastic tax rate on, right? Capital gain means that your maximum tax rate under the current laws is about 20%, 20. However, that inventory, that $1,000 of inventory, that is taxed at your highest ordinary tax rate, which could be the highest current tax rate in the country is 63%. So there's a huge disparity, right? A huge difference between 63% and 20%. Of course, you as the seller, you want everything to be classified as capital, okay? But the buyer does not want everything as capital. If it's capital, if it's goodwill, brand names, and anything where it's an asset that you've held it for longer than a year and it's really kind of these intangible assets, right? To the buyer, they can only depreciate those assets over 15 years. So it's going to take the buyer 15 years to see the benefit from every dollar that he or she spent buying your business. Versus with inventory, they can write off inventory depending on some other factors, but they can write off inventory in the very first year. So as a buyer, you want the bigger portion to be allocated to class 1 typically, okay, which is write me off right away, okay, versus as the seller, you want as much possible in class 6 and class 7, okay? So this is how the IRS pits the two, the buyer and the seller, against each other, okay? Now, there are multiple ways to deal with buying and selling, right? Because obviously at some point, both the buyer and the seller want to come to an agreement, right? You never let the tax tail wag the dog. You absolutely want to come to an agreement. So one of the ways, especially for a seller, there are multiple options of ways you can sell the business and not pay tax on the sale at the current moment, okay? So if you've seen some of our other videos, you might have heard me talk about a DST, a deferred sales trust. You can find the information on that at DST4NE, so DST4me.com. We go over it. There's a webinar, all sorts of things. So if you're looking to sell, it's a great place to go do it. If you're a buyer and you're a seller and you can't agree on this form, show them the DST4me site, okay? There's lots of options there. You might be able to look at something like an opportunity zone, okay, where you can take the money from the sale, from the capital gain of the sale, and you can put that into real estate and get some tax deferrals that way. Of course, you can always look at just good old-fashioned tax strategy, right? If you're going to have a big sale, what other things can you do in that year to reduce the tax burden on the sale, okay? So if you have questions, if you are buying or selling a business and you are looking at this and you're like, Shauna, what is class 1? What is class 3? What is class 6? If you're a CPA, if you're selling a business or buying a business, and one of the CPAs did not bring up this form, like, flag us down right away, okay? This form has to be with your tax return, okay? Otherwise, the IRS gets involved, which nobody wants that, okay? So if you're in the process of buying or selling a business, if you're selling and you don't want to pay tax, reach out. If you're buying and or selling and this form was never brought up to you, the 8594, I would absolutely recommend that you reach out to our team. We do this all day, help businesses buy and sell and make sure that it's done properly. And of course, with the minimal amount of tax for everybody involved. So if you have any questions or need any help, reach out to our team at taxgoddess.com. More than happy to walk you through the process, have discussions with you, with the whole team, the football team of advisors, make syou that everything is being done above board, crossing those T's, dotting those I's, and getting you the most money possible. So I hope y'all are having a wonderful day. And if you have any questions, let us know at taxgoddess.com. Talk to you soon. Thanks. Bye.